Good morning. On behalf of Banking Quest, I, Tilak Gulati, extend you warm welcome. Today, our topic of discussion is consolidation of public sector banks, its social, cultural, and economic impact. Yeah. So I have pleasure to announce that today we have with us Professor Rajiv Kishore Dubey, former Chairman and Managing Director of Canara Bank. So I welcome you, sir, Professor Dubey. So, though Professor Dubey is a well-known personality in the Indian banking industry, even then I feel it's my duty to introduce all the participants with Professor Dubey. Professor Dubey is MA in English Literature, LLB, CIB, MBA, and has done postgraduate level course in development banking from Victoria University of Manchester, UK, and also attended a course at Christ College, Cambridge University. Professor Dubey worked as Chairman and Managing Director of Canara Bank from January 2013 to September 2014. He held the office of Executive Director of Central Bank of India from September 2010 to January 2013. Professor Dubey started his banking career with Punjab National Bank from November 1977 as management trainee and rose to the level of general manager in March 2008 after working at different levels, both in operations and administrations across India. During his tenure in Canara Bank, Professor Dubey turned around the bank in less than 2 years by galvanizing the entire staff of the bank, turning focus on retail banking, SME banking, and technological advancement. Marketing vertical was set up by him to leverage the technology and boost the fee-based income of the bank. His focus on asset quality, CASA, and fee income improvement led to tremendous business growth and involvement of all staff. This has been recognized by Ivy Business School in the form of case study being taught globally and published by Harvard Business Review. His leadership style has been captured and researched by late Padma Shri Professor Pritam Singh in his book, The Leadership Odyssey from Darkness to Light. Professor Dubey has also co-authored an e-book on data privacy titled Data Protection and Privacy Implementation, India Perspective. Professor Dubey has also been awarded honorary distinguished professorship by Sri Sharda Institute of Indian Management for his research work in 2018. Professor Dubey is associated as mentor, advisor, director of several companies and also on the board of governors of various academic institutions as under International School for Inspirational Leadership through Bhagavad Gita, Global Cancer Mission, Shri Sharda Institute of Indian Management, Lal Bahadur Institute of Business Management, Birla Institute of Management and Technology, Golf Green, TKW Institute of Banking and Finance, I Trust Technology Financial Consulting Services LLP, Astria Enterprises Uttam Galva, which is now a part of ArcelorMittal Group. Professor Dubey is also an advocate and a part of law firm SNS Legal at New Delhi. The list of achievement of Professor Dubey is very long, which can be viewed on his website www.rkdubey.com. So, Professor Dubey, sir, I extend you warm welcome. So, friends, before I request Professor Dubey to deliberate on the subject consolidation of public sector banks, its social, cultural, and economic impact, I would like to give you a brief overview of the banking industry in India. Whatever banking scene we are witnessing nowadays is not complicated. We can there are very few number types of players over there. We can count them on our fingertips. There are scheduled banks and non-scheduled banks. Within them are commercial banks and cooperative banks. Within commercial banks are public sector banks, private sector banks, rural banks, and foreign banks. Besides, there are new types of players also. These are payments banks and small finance banks. Reserve Bank of India is the authority which regulates the entire banking scene in India. This entire banking space is not very old because Allahabad Bank, the oldest bank which got nationalized, came into existence in 1865, 155 years back. Canara Bank was set up in 1905. When Allahabad Bank, Canara Bank, for that matter, many other banks were working in this country, there was no authority to control them. There was no institutions to regulate them because Reserve Bank of India came into existence in 1935 when Reserve Bank of India Act 1934 was enacted. Even at that time also, Reserve Bank was banker to the government and it was the sole authority to issue banknotes. Reserve Bank got the regulatory powers in 1949 when Banking Regulation Act 1949 was enacted. Once the RBI got the regulatory powers, RBI asked all the banks working in this country to get themselves registered under the second schedule of Reserve Bank of India Act 1934. RBI offered certain benefits also, that whichever bank will get itself registered under the second schedule of RBI Act will be able to participate in clearinghouse of system of India, and that bank will be eligible to borrow money from Reserve Bank of India. RBI put certain conditions also, that those banks will have to comply with the instructions, guidelines and directives of Reserve Bank of India, and those banks will have to share such information as required by RBI from time to time, and those banks will have to keep deposited permanently with Reserve Bank of India minimum of rupees 5 crore of their core capital. Most of the banks at that time agreed to get themselves registered under the second schedule of RBI Act. Those banks were called scheduled banks. But at that time, few banks did not opt to come under the regulations of RBI. Yeah, please mute somebody, Abhishek. Yeah.
1 minute.
Yeah. So at that time, few banks did not opt to come under the regulations of State Reserve Bank of India. Even then, RBI allowed them to continue as non-scheduled banks because at that time, financial inclusion in India was very meager. But after 1949, if a new bank has come into India, that bank had to obtain a banking license from Reserve Bank of India, and RBI ensured that that bank is eligible to be included in the second schedule of Reserve Bank of India Act 1934. So from independence up to very long time, banking in India was going on at a very slow pace without much change in it. First big change came in 1969 when Government of India nationalized 14 private sector banks. Another big change came in 1980 when government nationalized another batch of 6 banks. So the main motto of nationalization of these banks were that the government wanted that the banking facility, particularly the credit facilities, should be provided to the general masses. Because at that time, all the banks in India were being controlled by big corporates, and all the banking facilities and the credit facilities were being provided by these banks to their parent organization or its subsidiaries. So to fulfill the social welfare agenda of the government, these private banks were nationalized. These nationalized banks were called public sector banks because shareholding of Government of India in these banks were more than 51%. So from independence up to 1980, in India, there were basically 2 types of banks working in this country. These were development banks, or we can say development institutions, and commercial banks. The names of the development institutions were ICICI, IDBI, IFCI, UTI, HDFC, and IDFC. Name of the commercial banks we all know: State Bank of India, Punjab National Bank, Bank of Baroda, Union Bank of India, Canara Bank, etc., etc. The working area of these development institutions and commercial banks were practically demarcated. Development institutions were in the field of giving loan for infrastructure purposes and for project loan. Since big ticket advance was required for infrastructure purposes and giving project loan, so these loans were given in the shape of term loan. So development institutions were basically in the field of giving term loan for infrastructure purposes and for setting up of big projects. Once the project was set up, these promoter of these projects used to approach commercial banks for meeting their day-to-day requirement, and commercial banks used to give them working capital finance. So the ticket size of working capital finance was much smaller as compared to the ticket size of infrastructure loan and project loan. But as per regulatory guidelines at that time, development institutions could accept only fixed deposits from the public, whereas commercial banks could accept current deposits, saving deposits, and fixed deposits. So the area of deposit mobilization or the area of resources mobilization as available to the commercial banks was wider, much wider than the area of resources mobilization as available to the development institutions. But the area of giving loan with the commercial banks was much small as compared to the area of giving loan as available to the development institutions. If a bank is having deposits but is not able to park its funds, is not able to give loan, that is a loss-making proposition. So to earn interest and to increase the profitability, commercial banks started giving loan for infrastructure purposes and for setting up of big projects. In other words, we can say commercial banks encroached upon the areas of development institutions. At that time, development institutions approached Reserve Bank of India, Government of India, requesting them to allow them to set up a commercial banking subsidiaries so that they could also tap current deposits and saving deposits from the general public. Agreeing to the request of these development institutions, after independence for the first time, Reserve Bank of India in 1994 gave licenses in the private sector. These licenses were given to ICICI Bank, HDFC Bank, Axis Bank, IDBI Bank, IndusInd Bank. With the coming of these private sector banks, an era of competition between public sector banks and private sector banks started. Since all these private sector banks were high-tech from the very beginning, so with the coming of these banks, an era of technological advancement also started between public sector banks and private sector banks. So after 1994, for a very long time, banking was going on at a very fast pace with competition, with technological advancement. Then in 2004, RBI issued 2 more banking licenses to Kotak Mahindra Bank and Yes Bank. Again in 2015, RBI issued 2 more banking licenses to IDFC Bank and Bandhan Bank. In 2015 itself, Mr. Taneja, mute yourself, Mahindra Taneja. In 2015 itself, RBI tried to give a new direction to the banking industry in India. RBI issued certain banking licenses. The working area of those banks were entirely different from the working area of these commercial banks. So in 2015, in one stroke, RBI issued 11 licenses for setting up of payments banks and 10 licenses for setting up of small finance banks. These banks are called differentiated banks. So what is the difference between payments banks, small finance banks, and all these commercial banks? Payments banks and small finance banks, they can do all type of banking activities which a commercial banks can do. They can accept deposits, they can remit funds, they can issue drafts, they can park their funds with other banks, they can invest in government securities, they can sell mutual fund products, they can sell insurance products. Then where is the difference? Payments bank can accept deposits, but they cannot lend. In deposits also, payment banks can accept current deposits and saving deposits. And further, balance in one deposit account with payment bank cannot exceed rupees 1 lakh at the end of the day. Means one depositor in his account cannot keep more than 1 lakh rupees with payment bank. Whereas small finance banks, they can accept deposits, they can give loan also. But the ticket size of loan cannot be more than 25 lakh rupees. Means to one borrower, small finance banks cannot give more than 25 lakh rupees. Whereas commercial banks, they can accept deposits, they can give loan without any limit. There is no restrictions on commercial banks in accepting deposits from one depositor as the restriction is applicable over payments banks. There is no restrictions for commercial banks in giving loan to one borrower as the restriction is applicable over small finance banks. Of course, while giving loan, commercial banks have to ensure that they have sufficient regulatory capital with them. And the difference is there that for payments banks, there is no stipulation of priority sector lending. Since they cannot lend, so the question of priority sector lending does not arise. As we all know, commercial banks have to give 40% of their total loan portfolio to priority sector. And this stipulation has been increased to 75% in case of small finance banks. Means small finance banks has to give 75% of its total loan portfolio to priority sector. So friends, this is how the banking sector has evolved from the last 150 years up to this time. Precisely from independence up to this time, banking has evolved. But over the last 4 years, we have witnessed a new change in the banking sector. That is a consolidation of public sector banks. Government of India has consolidated 27 public sector banks into 12 banks. In 2017, all the subsidiaries of State Bank of India were merged with State Bank of India. In 2019, Vijaya Bank and Dena Bank were merged with Bank of Baroda. In 2020, many other banks were merged together to make bigger entities. Oriental Bank of Commerce have been and United Bank of India have been merged with Punjab National Bank. Syndicate Bank has been merged with Canara Bank. Andhra Bank and Corporation Bank has been merged with Union Bank of India. Allahabad Bank has been merged with Indian Bank. So, so at the time of announcing this consolidation, government has made its intention very clear that the government wants only three types of public sector banks in this country. One type of public sector banks will be having strong national presence and global reach. Means those banks will be of international character. Those banks will be international banks for India. And second type of bank will strengthen their national presence. Means those banks will be national level banks. And third type of banks will strengthen their regional focus. Means those will be regional level banks. Public sector banks will be only of three types: international banks, national bank, and regional level banks. Government has also categorized these banks. International banks will be State Bank of India, Bank of Baroda, Punjab National Bank, Canara Bank, Union Bank of India, and Indian Bank. National banks will be Bank of India and Central Bank of India. And regional level banks will be Indian Overseas Bank, UCO Bank, Bank of Maharashtra, and Punjab and Sindh Bank. As per business figure available at the time of announcing consolidation of banks, State Bank of India would be the largest bank in India. Second largest would be Punjab National Bank. Third largest, Bank of Baroda. Fourth will be Canara Bank. Fifth largest will be Union Bank of India. Sixth will be National Bank, Bank of India. And seventh will be International Bank, Indian Bank. Eighth will be Central Bank of India. After that, the regional level banks number come. Though government has not clearly stipulated the working area of these three types of banks, but government has made its intention very clear that the global level banks will work for project and infrastructure financing and will be having overseas presence. Only global level banks will be allowed to open overseas branches. Whereas national level banks, they will meet the needs of SME sector, thus aiding Make in India. Whereas regional level banks that will concentrate on retail and priority sector, tax collection, miscellaneous functions such as financial inclusion and subsidy distribution. Government has further clarified that this process of consolidation will rationalize the demand on government financings for capital infusion. Means time and again public sector banks are demanding capital from the government of India, and government of India is infusing capital into them. From where these funds come to the government? These are nothing but the tax collected from the citizens of the India. These are the national resources. If these national resources are not optimally utilized, are not judiciously employed, this is a wastage of national resources. So instead of infusing capital in public sector banks proportionately, in my opinion, government should bifurcate this capital into developmental capital and survival capital. Main chunk of capital should be given for developmental capital. And in them, global level banks should be sufficiently capitalized. Since they have to compete at the international level, so their capital structure should be much above what is prescribed under Basel norms. Whereas national level banks, sometimes also they also have to compete with international players, so their capital structure could be as minimum prescribed under Basel norms. Whereas regional level banks, their capital structure should not be linked to the Basel norms. So since they have to give only financial inclusion task, and further government guarantees also there, even if government does not infuse any capital in regional level banks, even then these banks can efficiently perform the functioning of social welfare agenda of the government. So friends, this is what I wanted to tell you about the overview of banking system in India. So once again, I welcome Professor Rajiv Kishore Dubey, sir. So, sir, we start straight away with asking questions to you, sir. Sir, I have closed my deliberations with a controversial note that government should bifurcate the capital into developmental capital and survival capital, and the regional level banks should not be provided any capital. Sir, do you agree with my suggestion? Sir.
Thank you, Mr. Gulati.
Sir.
Thanks a lot. I am very happy to interact and to talk to the participants who are there, the fellow banker colleagues, and my warm welcome to them, sparing time on Sunday holiday. Well, friends, Mr. Gulati has already told about the the banking structure, how it progressed, where it is now, ending with present bifurcation or the consolidation that has taken place, and according to his perception, what he perceives as government's intention to have three types of banks, which actually was perceived by first reforms in the banking in 1992-93, when the reforms started in the country by Narsimham Committee. This is a perception of Shri Gulati ji. He thinks that the large chunk of banks should focus on the large infrastructure projects, the project financing, and other second one would be the SME banks, and the maximum capital should be for these two type of banks. Out of which the first one, which will have international presence also, should have a little more capital. And the third one, that is the retail bank, the regional bank, should have survival capital. By and large, it looks to be fine. But I have my own doubts whether this type of strict segmentation would be able to continue in a big diverse country like India, where regional issues are predominant over the national issues, as I have seen. If you look at the development of banking in Europe and US, you'll find in every big countries, there had been large number of banks. If we compare in our country, which is perhaps in area and in population, even bigger than them, have very few banks. I have been hearing that 100 banks closed or merged in US in that year or this year. That means number of banks in our country have been comparatively less than the global world. Anyway, that is a statement out of the actual factual situation that I have made. If it could be a good regimentation banking as suggested by Shri Gulati ji and as perceived by the government, I think it will be very, very smooth and financing available, and every type of banking facility will be available in the country. Friends, banks are the backbone of the economy, and economy is the backbone of any country. So, survival of banks doing their desired jobs is very essential for proper growth of the country, both social, economic, as well as cultural. I would comment about because the topic is starting from consolidation of banks and then its impact on social, cultural, and economy. You can all note down your questions and ask me when I conclude. According to, I'll just give you a brief snapshot, if you allow, Gulati ji, regarding consolidation.
Sir, please. Thank
Okay.
you. Yeah.
Yeah, I have seen in my life, in about 37 years of banking career, from 77 to 2014, three banks, one public sector bank, New Bank of India, merged in Punjab National Bank in 1993-94, which incidentally proved to be a disaster. Why? How it failed? Because I was witness to all the things in Punjab National Bank while the bank took over new. I'll comment about it a bit later. Then I saw a merger of, sick, or you can say, distressed merger or a weak bank, Nedungadi Bank Limited. It was merged in somewhere around 2002-2003, which had around 150 branches, mostly in Kerala, around 100 plus branches, rest spread over all the country. Then one more bank, Hindustan Commercial Bank, we call HCB. It merged into PNB. It was a Kanpur-based bank, not very number of branches, around 100 or so. And those two mergers, HCB and Nedungadi Bank, nothing happened. No problem to PNB people, no problem to those banks, Nedungadi and HCB. The merger has been as smooth as it could have been thought of. There were no HR issues, those branches simply amalgamated or absorbed by the parent bank, Punjab National Bank. Why? It's a big question. While New Bank of India fails, those two banks. In fact, in the history of Punjab National Bank, there have been Bharat Bank and Indo Commercial Bank, several other banks merged before 1977. I am not getting into that. Similarly, in other banks like Bank of Baroda, Bank of India, Central Bank, SBI, various small banks merged. Even the United Bank has been a sort of conglomeration of three North Indian, Northeast or Eastern banks into one bank as a United Bank. So banking has evolved. SBI was actually evolved out after Imperial Bank of India, then Bank of Chennai, Madras, Bank of Kolkata, like that. Then SBI Act came, and since then SBI has been there. So for entire banking industry, the banking has evolved like that. The criteria of merger as envisaged by the then Finance Minister Dr. Manmohan Singh after Narsimham Committee's first recommendation. I will tell about the Narsimham Committee in a very, very brief. They made three recommendations. Three large banks with international presence, as Shri Gulati ji said, around 8 to 10 national banks, as he has suggested, and large number of regional and local area banks, which he calls it a retail bank, for handling, the retail trade, the payment and small finance, the priority sector, etc. And the international business to be done by the three large banks. In order to implement this, the first that large banks was experimented in 93-94 by merging New Bank of India, a Delhi-based bank, into Punjab National Bank, another Delhi-based bank. Most of these branches of these two banks were north-based, so they thought it may be synergy of culture, synergy of social, and the banking merger would be smooth. Most of the systems and processes of PNB were adopted by New Bank of India, as it was said those particular days. But despite all those pre-thinking, it proved to be a disaster. Let me analyze this, because this is very important to talk about other mergers. It proved to be a must merger, disaster, because of few factors. According to my perception, which is purely mine, I won't comment on others. It was mainly HR and cultural issues which led to the problem. Mainly, there was no technology at better term. They were all manual banks, so no question of technology being the reason. like software, Infosys, and no other things except for HR and cultural issues. Their culture or they evolved in different era, and their management had a different approach to handle the issues. In PNB those days, I am told unions were there, but not very, very militant. While in New Bank of India, unions were there and they were very, very militant. It was dominated by some trade union. That is what is being said. Then I would say inhuman and insensitive way of handling the people, considering in nationalized banks branches and their staff as second-rate citizen. After 3 years of litigation, finally Supreme Court also said they are at par, although PNB told their employees to be in seniority a little lesser. Anyway, but then in the real practice, right from top, I won't name anybody, till down to the bottom, these were the issues where PNB people will be heading the branches. This was an unwritten policy. All the staff of New Bank, which wherever it was found surplus and wherever vacancies were there in PNB all over the India, they were simply sent here and there. It created a lot of resentment, a lot of hard burning. So, something like this is my bank, that is your bank. Mera bank, tumhara bank. According to me, these all things led to a lot of resentment, and which never ended. Even now they say ex-New Bank staff, although I personally found many of the New Bank people wonderful, like PNB people, like, nowhere it can be all 100% good or bad. It will be mixed everywhere, whether it is a PNB or New Bank. Most of my friends presently have mix of more New Bank and PNB people. So it is something one-to-one. But by and large, handling became difficult because of these issues overshadowing all other issues. 1998, because no merger addition or a consolidation went ahead, second recommendations of Nursing Committee came, which said autonomy of banks for a strong banking system, it said, but nothing happened. Reduction of government stake equal to 33% in the Atal Bihari Vajpayee government. Dr. Yashwant Sinha, the then finance minister, tried, but it didn't go ahead. Of course, with these things, they survived banking system, the financial crisis of 2008, especially the Southeast Asian crisis. Reforms in the role of RBI, NPAs in priority sector lending, they suggested there should be zero in the three large banks, but it never happened. It led to one important milestone, securitization and reconstruction of assets and enforcement of Securities Act 2002, what we call it SARFAESI Act. And DRTs were created. Capital adequacy and tightening of provisioning norms were suggested first time, 9% CAR by 2000 and 10% by 2002, universally across, which perhaps was a not sound basis. And penal provision for the banks which failed to reach this capital structure. The second, consolidation, apart from, distress merger, was, as told by Shri Gulati ji, the initial opening remark, SBI absorbing 2 subsidiaries first, later on 5 subsidiaries, and Bharti Mahila Bank also. It also went very smoothly, my dear friends. Why? SBI has the same synergy, same system, same logo, same culture. Rather, those people from subsidiaries got some additional benefits which were available to SBI people. So naturally, there would be no resentment. Some unions made call, but then it went as a very smooth amalgamation and merger. Actually, there was no flutter. It merged very, very smoothly. Emboldened by that, government tried Dena Bank, Vijaya Bank merger amalgamation with Bank of Baroda, with the thinking that Dena Bank is a Mumbai-based bank. There should be no issue. Vijaya Bank was considered a relatively small but safer bank. Although NPA level was different in all the three banks, capital level was different. Only the binding force was the software, that means technological thing, was same in all these three banks. This was tried, and it was again, according to the government, they found it successful because the three MDs issued signature in their signature all the guidelines initially. They thought the best of HR and other practices of the three banks will be adopted, and some studies they conducted, and the studies they found, the studies they suggested. I have some statement. After BOB merger with Dena and Vijaya, it was found better synergy, achieved scale, and resulted in better shareholder value creation. This was the observation of the committee that suggested. Based on that, 1st April 2020, that is 2020, was considered the biggest merger taking place. As told, PNB took over, or you can say absorbed, OBC United Bank from 1st April. One is a Delhi-based bank, one is a Kolkata-based bank. I think no similarity of so many things, but then the technological or the software basis was, they were phenomenal. Canara Bank and Syndicate Bank, because I would say better synergy, because the same area from Karnataka, same culture, emanating from Manipal, Mangalore, Pies banks, both Canara Bank, Syndicate Bank, Vijaya Bank, and Corporation Bank, they were by Pies and Hegdes from Manipal and Mangalore. They had better synergies and cultural thing, more knowledgeable staff, etc. And incidentally, for these two banks, Finacle was not there, iCube was the software, and that will go, I think, smoothly, according to my perception. A Union Bank with Corporation Bank and Andhra Bank, again based on technology rather than other thing, and Indian Bank with allowance. Now this is already going on. Some banks have not been merged. I think I will talk about it a little later, like Bank of India Mumbai based, Central Bank of India Mumbai based, Bank of Baroda Mumbai based, Pune based, Punjab and Sindh Bank Delhi based, IOB Chennai based, the UCO as Kolkata based. The reasons are many. We will talk about that a little later. Maybe the reasons of software, maybe the reasons of more NPAs, maybe some regional things very strong. What I have observed, my dear friend, role of leadership is very, very important in these mergers and amalgamations in the Indian banking especially, although it is proved globally also. Because mainly HR, first I would say mainly HR, people integration with love and compassion. People integration with love and compassion. Equal and equitable treatment of all and sundry. Unless this is done, no merger can be successful anywhere. By rod, you cannot do that. Cultural integration is difficult to define, but if the first aspect is taken care of, according to my perception, cultural aspect is taken care by the people. Then comes technology like integration of software, logo, identity, etc. I find all three banks' logo in the present system and the merger good, not a bad thing. The major thing in the implementation would be systems, processes, policies, and products. They could be different. Now here I have a catch. What is that? I have found even the managing customer perception is essential, as impact on customers of banking merger acquisition is often quite emotional, as identity is lost and thereby loss of business also. I find in all these old public sector banks, there are second generation, third generation, fourth generation customers who feel possessive about these banks as to these are the best, all others may consider them best or not. This affects, in the Indian psychology, In PNB I found, in Central Bank I found, in Canara Bank. It is there in every bank. The old people are the old, but with the technology and generation gap happening very rapidly, this also is reducing. The gap is reducing by and by. Actually, it is the execution and implementation which is the key of success, or else may lead to more problems and more chaos. In this world, you know, you'll be surprised that top ranked banks in the world, despite so much mergers and acquisitions, India is not in the top 25. India is only in the top 50, or we can say in the top 100. In the top 25 bank, if you see managing, we feel that SBI is not there. While if you see the global thing, although in GDP we are almost number 6 or 5th now, China has 6 banks in top 25. UK has 3 banks in top 25. In GDP, they are different. Canada, they are 10th largest economy, but they have 2 banks. Spain, 13th ranked, but it has 1 bank in the top 25. SBI is only the 47th after those mergers. That means we stand nowhere globally. So, in order to be globally competitive, as started by Shri Gulati ji, we have to build banks that are bigger and stronger than what we have to at this time. The faster we do it, the better it would be. The amalgamation is the first step. Second step is to achieve that goal of size. I saw New Bank, HCB, Nadugudi Bank, myself. You have seen several banks being done like that. In Bank of America in 1990, Merrill Lynch, the topmost bank, was also merged, and they became $2.28 trillion economy. This is there, done everywhere. I'll talk about economic perspective in a little later discussion. But the question regarding Gulati ji's point, that whether developmental capital, yes, it makes sense, Shri Gulati ji, that we have the highest capital allocation of Basel norms only for large bank, maybe 3 or 5, maybe 3 or 5. They may not do everything like all other banks. They may do large scale financing because DFIs are not there, or otherwise, as we hear here and there, maybe government is considering to create or bring out one more DFI like the old age IFCI, IDBI, ICICI. If that comes, it is a different thing. But otherwise, 3 or 5 large banks with international presence, most expertise in the project finance, they should be giving capital as per best. After all, before 1935 and 1949, when the Basel Committee norms were not there, still banks were functioning. Banks were surviving. Allahabad Bank, the oldest bank, PNB, Canara Bank, they all survived even as a private bank with no capital regulation and no regulatory norm. So, if we do those Basel tough norms for these 3 types of banks, development banks will have a little second in this category, maybe SME banks, where also the risk of default is more relatively because small entrepreneurs run these businesses. But the number is so big in the country that they would need a little better capital. So development capital, I also endorse it should go to the large banks and SME banks for developmental capital. And for survival capital, retail need will never go because household, will need houses, will need, technology, payment services. They would need, vehicle and so many other things, small, which will be there, subsidy distribution, subsidy and all. So, yes, there are 2 types of more banks which have come up, small finance banks, then payment banks. There were regional banks, rural banks sponsored by the public sector bank. Then there were cooperative banks, and recently the government of India has brought them also under proper regulation of Reserve Bank of India. because earlier, because of dual control of state government and Reserve Bank of India, various issues were formed. My dear friends, these are the questions that I would, these are the points I would say are addressed to the point raised by Shri Tilak Gulati. Shri Gulati ji, I would like you to
Yeah.
go further.
Yeah, thank you, sir. Thank you for explaining in such a lucid manner with a clear concept, sir. So, friends, I have a request to all of you. Please, if you have any question, please jot down your question in the chat box so that I will read and ask these questions to Professor Dubey, sir. Sir, my another question to you, sir. Reserve Bank of India has issued licenses to new generation tech-savvy banks, Axis Bank, ICICI Bank, HDFC Bank. Within a short span, these banks surpassed age-old public sector banks in all banking parameters. As per Bloomberg data of 2016, market capitalization of HDFC Bank was equal to the total market capitalization of State Bank of India and all public sector banks put together. Means by selling one HDFC Bank, State Bank of India and all the public sector banks could be purchased. At the same Bloomberg data, yeah, Pawan, everything okay? Yeah, Pawan, don't present. As per same Bloomberg data, the market capitalization of Kotak Mahindra Bank was equal to the total market capitalization of all the public sector banks. So the reason for this, the status of these public sector banks, the reason may be said that over a period of time, public sector banks have started competing among themselves, each snatching the business of another public sector bank. Whether business remains with one public sector bank or the other, it is not going to benefit the owner, the government. Instead, time, energy, and money is wasted on unwarranted competition. With the exception of State Bank of India, none of the public sector bank is able to compete with these private banks in any parameter. So my question is, sir, whether there are 27 public sector banks or 12 public sector banks, it will not improve the situation. And then where is the guarantee that these 12 public sector banks will not start competing among themselves again? Having 27 or in its place 7 or 12 banks will not serve the purpose if they do the same type of business, selling similar products, competing among themselves. What is required is not mere consolidation, but it should be coupled with the change in mindset. Sir, over to you, sir.
Well, Gulati ji, a very, very interesting question. I'll say two, three dimensions to your question. One is, in the end, you said a word which I am starting with, change in mindset. Friends, I have observed in my whole life, this is the toughest task for anyone. I don't say any leader, for anyone. Ultimately it boils down to, if you can't change others, change yourself. Changing mindset, which is evolved over a period of time, they say habits die hard. Changing mindset, changing attitude. In behavioral science also we say changing attitude is the toughest task. So changing mindset is easy saying than done. This is my belief, although nothing is impossible, I agree. But I am only saying relatively it is a difficult task, changing mindset of hundreds and thousands and lakhs of people, the bankers and the public, both. Bankers are in a few lakhs, but the public are in few crores and many more crores. So changing mindset is not easy. One, two. You said that there has been a lot of competition by the public sector among themselves. I hope you said so.
Yes, sir. Yes, sir.
Yes.
Yeah.
I am feeling this will never go, because the scope of activity of each bank is almost the same. Unless you do regimentation, and strict regimentation or segmentation is very, very difficult. You can't say that, just go back. Earlier, SBI was doing the entire government business, right?
Yes, sir.
Then all public sector banks with their liaison and government, for government business division they created, they put people in Delhi, like Union Bank had a general manager dedicated for government business, Canara Bank had a government business branch. They also started getting, because they were getting good float and they were getting good fee. Why they should not do? They will do. Now you can say they are competing among themselves, right? Third, the moment private sector bank came, HDFC Bank, what they did, they also did the same thing. They were not government bank, they were not public sector bank, they were private sector bank. But they found, in order to increase their CASA share, which was very low, to increase CASA share, they brought technology, they developed product, and they snatched away entire business of public sector bank, and they increase their CASA, their fee income by that. Have this competition not there in the public sector bank among themselves and between public sector banks and private sector banks? Am I right or wrong?
Yeah.
So
Yeah,
far,
absolutely.
so far. So according to my perception, as long as banks will be there, competition will be there. In the competition, it is survival of the fittest. Those survive who are fitter, fittest. So I won't say there is a need for watertight compartmentation. Yes, changing mindset happens automatically, slowly. When we were, doing manual working through ledgers and all, the work, the thinking was different. I remember when I was a scale 1 probationary officer, my branch, used to do saving fortnight, 400 accounts of 10 rupee each, and then 4 ledgers were filled. The moment 4 ledgers were full, they would say, now we are entitled to get 1 clerk. Those days, criteria of giving clerk to the branches was counting of ledgers. So, that was the mindset. The moment ALPMs came, that mindset changed. The moment, the operators came, teller came, the moment CBS came, even the peon promoted clerks automatically started doing whatever they could do. Look back and go ahead. So, mindset changes when the environment changes. Now, digital banking. I just jumped to digital banking. Me and you may not be very comfortable, and my fellow friends from banking in digital banking. But the younger generation, nothing is to be done. They are already comfortable with that. My grandson is prone to digital banking rather than me. My children, the moment I come to start my PC and start Google for chat and for the conference, he comes running and start. दादू रुको मैं कर देता हूं, because he is attending classes online these days regularly. So what I mean to say, earlier we had never heard, we knew the word of demand draft, remittance, TT, and MT and commission earning, and that was the only source. Now it has gone, permanently it has gone, because IMPS, so many instruments have been developed where online, in NEFT are. So what I mean to say, with the change of time, with the change of environment, as it is happening, and the technological advancement is happening across the board, not only in private sector bank, equally in public sector bank, change of mindset has taken place, is taking place, and will in future also take place, as we feel. Whether somebody agrees with me or not, this is my I am giving you my perception of the issue. So there is no need to take a screwdriver and put it in the person's brain and say, I am changing your mindset, or do tens of lectures of HR people for changing the mindset. They come, listen, and the moment they are in the field, again they get back to the same mentality. So there is no need consciously to changing the mindset of the people. It is happening, and I think you should vouch to that. It is happening more rapidly than even thought of.
Thank
I
you.
find we keep cash in our wallet even now. My children, they don't ever withdraw cash. They don't go to ATM. They work only by Paytm. They work by all these credit card and debit card. The whole banking is into debit card, credit card, and internet. They never go to open branch for any account. After that, nothing is being done by them. So I would be very clear on this, that their change of mindset is taking place more rapidly than even thought of, conceived. So far as competition is concerned, any competition in the open market also is good for survival. So let us not end the competition. Yes, but your initial point that there should be segmentation broadly, which I agree. Each bank doing everything, it still will be there. I am telling you, it still would be there. Like large branches, large branches, they are exempted to do retail banking. But a customer, a corporate of theirs, he says, I want car loan from you only. I won't go anywhere. I want housing loan from you only. You will have to permit. Even with the hub and spoke model, I remember struggled in the last 10 years in my, when I was EDC, we had to liberalize and say, okay, if the branch chief manager wants to sanction a loan, he can do also, not sending to hub. All other things will go to hub. So what I mean to say, you can have some systems like hub, spoke, like dedicated branches for big project lending, for SME lending, for retail lending, and other thing, but competition, don't feel competition should go. One, two, my take on payment banks. According to my perception, Gulati ji, whether somebody agrees or not, payment banks are redundant. They should be closed as early as possible, or they should be upgraded to at least small finance bank. Payment banks are not viable. They have been closed. You might have heard 2-3 banks already closed, and rest also want to upgrade because they can accept deposit only of 1 lakh.
1 lakh rupees.
And they can do only government business. What is there in that? Initial idea of the government to have postal bank as payment bank was wrong. Now they want not only to be converted that payment bank stature to small finance bank, they want it to be converted to full-fledged universal bank. And tell me what is wrong. See, you have already seen 3 years it has functioned. Maybe you employ more people. They have the largest network in the country. 1,55,000 post offices. Now they are also tech driven. Now I think online they also have the banking. If they don't have, they will have it sooner or later. So once they have online connectivity, even the remotest part of the country, the 1,55,000, most of the rural areas are covered by them. The toughest area, the toughest terrain, the forest, and I would say rural, the postal banks should be converted to full commercial banks. Maybe you can call them small finance bank, I don't mind. Small finance banks, coming to small finance bank, all small finance banks stature should be upgraded. Like if they do only priority sector lending, 75%, okay, let it be. So government can use them for their government programs. Their capital structure should be thought of as slightly lesser than the first and the regional bank. So the payment bank should be converted to small bank. Any bank with the name bank tag must be able to accept deposits and lend. If it is not, it is not viable. If it is not, it is not viable. So let me conclude this particular point. Small finance banks, all payment banks should be converted to small finance bank. Even postal bank should be converted to small finance bank. We should not do crowd of commercial banks more. Even Bandhan Bank is now trying to become universal bank, but it's still not. The mentality of their people is only MFI. So even that should have been better as a small finance bank. So we should have this type of system where, yes, large SME and SME banks and retail banks, these are basically small finance banks having all characteristics of payment bank, so that reach of payment banks extend up to the last mile, the poorest of the poor people. Because now the government wants entire panchayat Wi-Fi to be done in maybe 2-3 years. So all connectivity is likely to be there. This is my point reply to your question.
So, thank you, sir. Thank you very much. There are a lot of questions coming up in the chat box I am seeing, and we have the very short time. Sir, I request that please be precise in your replies so that all the questions can be covered.
Okay.
So regarding this payment bank, sir, I have a humble submission that the payments banks are nothing but the extended version of digital wallets, because digital wallets were working in this country. They were accepting deposits and remitting the funds. The payments banks are the extended version of digital wallets. The biggest irony is that digital wallets are blooming. They are making their business manifolds, whereas payments banks are not able to function properly. They are not able to garner that amount of business. There's a biggest irony. But I will going to the another question of Umesh Joshi. He has written, sir, in a very short, he says, does the government has plans for further reducing the public sector banks from present 12? Government plans to reduce from 12 to less than 12?
One, I am not in DFS, so I can't say exactly. So I can't give
Yes.
the exact reply. But as I hear from the hearsay that yes, they want still to reduce the number of public sector banks. We hear that they want to privatize some of UCO, PSB, Bank of Maharashtra, these banks, or either they will be merged into other banks.
Right. And the views of Mr. Raj Chopra. He says thanks to Shri Dubey ji for knowledgeable views on particular honest views on merger of New Bank of India with Punjab National Bank. I know Mr. Raj Chopra was in New Bank of India and he has suffered a lot due to merger of New Bank with the PNB. These are his views and you have acknowledged his views, sir. Sir, another question of Pawan Purohit. He says, sir, my question for Shri Rajiv Dubey, sir. One of the main banking reform was making global sized banks for which bank amalgamation was proposed. But is it not practical to open new global sized bank which will have new synergies to compete with global banks rather than merging old banks which lack that synergy and culture? China has also adopted the same strategy. China's top 10 banks banks were newly opened in last 25 to 30 years. Means he says that instead of merging the old banks and making the global level banks, it is better to create a new global level banks that will be having more synergy. Sir.
I don't agree, dear Purohit, with your view. This is your view. I respect your view, but I don't agree because China's business model of the country or the governance model and India's governance model is different. Whatever in India, X party says, when it in opposition, when they are in power, they say the other way around. So here, thumb rule doesn't work too much. In China, whatever government decides, it is being done. We don't have that governance model. Let us not compare on appeal to appeal from China to India on this particular point. It will be difficult to create new banks which suddenly become global size. Even if we merge, as somebody asked the first question, I would agree that the Punjab and Sindh Bank, Bank of Maharashtra, UCO Bank, Bank of India, the remaining, what I mean to say, bank, rather than being privatized separately into small banks, they should also be merged into the top 3-4 banks like PNB, Bank of Baroda, SBI. Let them be strengthened as 3, 4, 5 big bank, 3 or 4, maximum 5, and the remaining, if they want, they may have the national bank and the remaining as a regional bank, as initially we had discussed. This should be better rather than opening new bank. This may not work presently. Raj Chopra ji, I am very happy that you were, you found my reply really genuine. I made a very authentic comment, honest comment, because now I am 6 years into retirement. I don't fear. And then why should I fear? This is the reality. We must agree, we must confess. Thank you very much for your comment.
Sir, there is a news item in the paper. It is coming that these leftover banks, 6 banks, government is going to privatize them. So that is a news item going on. But before you reply to this, sir, there is another question of Tabassum Ara, same in the same line. She
Okay.
says it would be helpful to have a webinar on privatization public sector banks. Is there really a need to privatize public sector banks? Here, sir, I would like to give I would like to agree with Tabassum Ara on certain points. I would like to give you a uh, some certain data, sir. As per PJ Nayak committee, which was set up to review the governance of board of banks in India, it had suggested scrapping and removal of Bank Nationalization Act, State Bank of India Act, and State Bank of India Subsidiaries Act, because these acts require government to keep its shareholding above 50%. If these acts are scrapped, then the shareholding of government of India can come down below 50%. Another point is, sir, Deepak Parak, the stalwart in the banking industry in India, he has suggested government to allow private sector talent to come in to run public sector banks. And another point, sir, in favor of public sector bank, it is being said that there is a social tag attached to them. These banks are instrumental in giving priority sector loan to small borrowers, as if these banks are privatized, so priority sector loan will stop altogether. So, but thing is that now Reserve Bank of India has given licenses to small finance banks, and they are required to give 75% of their total loan to priority sector. And another point, sir, in favor of public sector bank, it is said that they play a key role in financial inclusion. But now payments banks have come to take over this responsibility. In view of all these facts, so what are your views? Whether public sector banks should now, time has come, public sector banks should now be denationalized? Sir, over to you.
Going by the recommendation of Shri Viral Acharya, the then Deputy Governor, and Raghuram Rajan Sahab, the ex-governor of RBI, recently they have come out with a paper which says yes, all these public sector banks should be privatized. They have been, they have studied in US where all such things are never in government control. They have seen only models of private sector. So they think here also private sector. Our country is a bit different, although they were born and brought up here and then went to US. Uh, According to my perception, you have asked my view, and Tabassumji has also said so. I feel there is no need for privatizing, all together privatizing the public sector banks. There is a need for some public sector banks. Later on, in phases, if some experimentation is to be done, it can be thought of. Now, come on. IDBI Bank is considered now as a private sector bank, with LIC having 50% plus, the stake. But have you find any change in their working till now? No. In our country, the moment public sector is transferred to private sector, it starts behaving like a government entity or a private baniya shop. Private sector, getting private sector is not the panacea of all ills. Look at Yes Bank. Should I comment further?
Yeah,
I think I did not comment further. You
yeah,
have seen, if problem has to happen, even without CVC, it can happen. You see ICICI, what has happened in ICICI? The famous case of ICICI, the Yes Bank, and similar many such stories in private sector, the similar things are there also. I would say, in a, if you go by the Mao Zedong's statement, he used to say, let 100 flowers bloom. In a big economy like India, why we should have only public sector banks or only private sector banks? Let there be public sector banks, let there be private sector banks. We need more banks. Fine. Based on experience, within public sector banks, you can have small finance banks, private, payment banks. You can have segmentation working also, and try it. If it succeeds, fine. If it doesn't succeed, we may do moderation and move further. There is nothing like one thing fits all. So public sector alone is not good. Private sector alone is not good. We once upon a time, UCO Bank was a Birla Bank,
Yes, sir. Yeah.
your bank, and it became public sector bank. Now somebody says, इसको फिर से private कर दो. See, the point is, ऐसा कुछ करने की wholesale जरूरत नहीं है. We should go step by step. Public sector bank, there is a need for public sector bank in our country where, and what is wrong with the word social banking, my dear friend? I personally feel no wrong. In our country, diversity between rural and semi-urban and urban is so much. Between poor and rich is so much. It is widening further and further. You see Ambani, Adani, where they are going, leaving behind all others. At this moment, Ambani can purchase anything in India. Even that is a monopoly generation. So according to me, we should not be allergic toward social banking. It is rather our pious duty. Why CSR is there? Corporate social responsibility. Even private sector is being asked to do 2% of their profit into social banking. Let social banking remain with some public sector bank, whatever is the name, whatever you call it, the national bank or a regional bank, I don't mind. But social banking is required in our country.
So thank you, sir. There is another question of Shankar Ghatia.
Yeah,
And
what Shankarji said?
NBFCs are misusing the freedom given to them, citing some reasons always. Do they require further restructuring by RBI? Actually, Shankar, this is a question regarding restructuring. Here we are talking about merger. So in restructuring, we will ask this question. Another question by Ramesh Gopal Das Vatwani.
No, Gulati ji, let me just comment one on Shankarji. Shankarji, the whole NBFC model needs total review by the RBI and the government. I won't comment beyond this. Whether restructuring or not, their model is, I feel, it needs to be reviewed further. They are dependent on banks and then they keep on earning and earning and earning. Even if they maintain capital adequacy of 25%, still they can go bust. You see DHFL, what happened? ILFS, what happened? So, according to me, NBFC is a model which needs to be thoroughly reviewed by maybe some committee consisting of stalwarts of economists, government, and regulators. This is my view, Shankarji.
Yeah, thank you. There is another observation of Naresh Gopal Das Vatwani. He said, we are proud to be participants in such a session covers from 18th century to 21st century. Future-like issues are also well discussed with regards. Thank you, Naresh ji. Thank you very much.
आपको हमारा प्रणाम नमन आप ऐसा मान रहे हैं भगवान आपको सुखी रखे. May God bless you.
Yeah, there is Anya Singh. Thank you, sir, for giving elaborate views on amalgamation of banking sector. Can we have a look on privatization of banks? I think that question has already been deliberated. SK Tiwari, thanks Gulati sir. The webinar has been on very important issue on current times. Your address as well as Mr. Rajiv Dubey's address have been marvelous. Sir, is there any probability of privatization of 4 banks, namely UCO Bank, IOB, Bank of Maharashtra and Punjab National Bank? I think that question has also been covered. Manoj Rathi has written, sir, my question is now big banks are hiring for critical role of risk management CRO roles, but the lack of skilled and qualified people at middle and senior level for this function will affect the banks as well as, and shall banks start hiring later more skilled people in the risk function, which is even more important now? Actually, now the risk, sir, he just want to say now the banks are now being prone to more risk factors. So hiring outside CRO and risk functions, should bank be more specialized in risk perception?
Yes, they should be, and they must take specialized people in IT, in HR, and it is always good. I remember one GM in PNB was, from BHEL, Mr. Vasan, Srinivasan, wonderful person. His type of HR in PNB I have never seen before him or after him. If you take good person in technology from the market, if you take from risk management is highly specialized field, and there is no dearth of people. People are there available. We should take a specialized person for the specialized things.
Thank you, sir. Nagesh Babu, he is from Canara Bank, sir. He has, I think, worked under you also. After the current year's merger of banks, we have interacted with employees of merged banks and found that there are three important issues which are coming in their way of struggling to adjust in the amalgamated environment. Systems and procedure, HR practices adopted, loyalty towards their banks. We feel that services of the retired senior officer should be utilized to counsel the employees of the merged banks on the above aspects to bring awareness of the culture. Sir,
It
over
is
to
a good
you.
suggestion, but but the point is whether the present management at the top would welcome the senior people retired. That is the whole issue. If they think that they only can do and they will do, then they will not do. If they want services of retired people, senior retired people are available, would be available, but then they should be given due respect and they should be given due authority, then this can be solved or this can be addressed. I am finding, because the guy Nagesh Babuji is from Canara Bank, I find some issues like New Bank PNB have started echoing in syndicate bank staff and Canara Bank staff. Whether you have felt or not, I have felt. Syndicate bank people are feeling, although it is the same similar structure, Karnataka, Kannada speaking, same area, same birthplace, but still, if HR handling is not proper, I am finding this echoes have started happening. This is the e-syndicate bank and this is the posting and placement. It happens. Human psychology, because human beings are human beings. Your suggestion is welcome. If it is done, it may help.
Yeah, thank you, sir. Then Rajni Saraf, an honest confession about merger of Punjab National Bank with NBI, as we felt the conflict of interest at home with two brothers working in these two banks. Yeah, that point has already been covered. Yeah, thank you.
Rajni
Sarita
ji,
Kathur.
Namaskar. Rajni ji, I think she is from JK Bank, Rajni Saraf Mahajan.
Yeah. She is
Yeah, her
from. Yeah.
husband Satish Mahajan ji worked with me in PNB Delhi, a wonderful person, both of them. Rajni ji, I never felt shy of speaking truth. It is a truth whether somebody admits or not. You both are wonderful human beings, wonderful bankers, and we say kudos to both of you. Thank you.
Thank you, sir. Sarita Kathuria, thanks, Rajiv Dubey ji. I agree with your views on competition and am afraid social impact gap is not easy to fill up.
Yes.
Yeah.
You are very right. You are very right. That is why I held very strong view that competition is the backbone of banking. It should not be totally away. Whatever you do, if the business is the same, people will run for that. So competition, I don't say it should be eliminated. As far as possible, there should be compartmentalization, but social banking also in our country, as long as disparities are there, it is must. Everyone needs to do. Even the large banks, 2% of their profit they should do for the CSR. Middle banks or the national banks may also should do partly for the CSR, or the social responsibility is the duty of we all citizens of India, and it should not be removed at all.
Yeah. So, Naresh Gopal Das Watwani, I concur on NBFC view urgent requirement. Thank you. Umesh Joshi, sir, he has written, sir, kindly conduct a webinar on Basel III guidelines in light of current economic situation arising out of pandemic regards. Okay, thank you. Sure. We are conducting all the webinars on different topics and on different platforms. So surely we will be conducting such webinars. We have noted down your view. Mr. Rajkumar Chattani, just one word, kudos to Mr. Dr. Dubey. Chattani is a retired general manager from UCO Bank. Sir, he is expressing his regard to you, sir.
Thank you, sir. My prayers and best wishes for your good health. Thank you.
Okay. And Mr. UK Bajpayee, thank you for your deliberation. The content was very good and informative. Thanks to Mr. Gulati and Mr. Dubey. Thank you, Mr. Bajpayee. Shankar Ghatia, sir, how should a young pure joinee like me should start a banking career in 2020 world. I have joined this year as State Bank of India probationary officer. Sir.
I can consider you as a future MD and chairman of a public sector bank or even SBI. There are two, three things you should never forget. Work very hard. Work very hard. Even if you are not intelligent, if you do hard work, you will go ahead. Sincere work, devotion to duty, your sense of responsibility for posting. Don't go here and there and ask for approaches. Wherever bank posts, consider it as a will of the God. Go wholeheartedly, do your best. If you do your best, help others. Have a helping attitude for your seniors, for your juniors, for your public, for the poor people, for the social welfare. Have a very, very helping attitude towards society and attain excellence in whatever you do. आप जो कुछ करें सबसे अच्छा करें. भगवान आपको एमडी चेयरमैन भी बनाएगा अगर आपके मुकद्दर में लिखा है, पर जब तक आप ट्राई नहीं करोगे तो पता ही नहीं क्या लिखा है. तो ट्राई करो, ट्राई अगेन till you succeed. God bless you.
Thank you, sir. Manoj Rathi, he has written, thanks for the reply, sir. I have also got the opportunity to work with Canara Bank under your leadership, sir.
Thank you, Manoj. Thank you, Manoj.
Updesh Madan, excellent webinar. Thanks to Mr. Dubey, sir, and Gulati ji. Thank you very much. Mukul Tulsidas, sir, what do you feel about the future of foreign banks in India, especially in view of the new current account rules that borrowers must have current account with banks they have taken loan from? With few branches in India, will they be able to continue in India?
Yes, they will continue. See, these ups and downs continue. Indian banks are still working abroad. Nothing has happened, not much has happened. Whatever government wanted, consolidation, that only has happened. So whenever, like I had a branch in London for 1973 onward, opened a branch in New York, we have a branch in Moscow and Chicago. Whatever is there, whenever we have branches abroad, they will always be few. Similarly, for Stanchart, Grindlay, they are in our country for more than 100 years. Some of the banks have recently come. So this is over country. That is an international policy that, you represent that bank. For various reasons, those branches are open. And as long as they are under regulation, we need not be afraid. They will continue. If they feel paucity of capital or if they feel paucity of business, there is no paucity of business in our big country. I am telling you, let 100 flowers bloom. और ले आइए 100 बैंक बाहर से तो भी वो चल जाएंगे. इतना बड़ा कंट्री है, कुछ नहीं होगा.
Thank you. Sure. Mr. Raj Chopra, he has written, thanks Gulati ji and guest speaker for a nice and educative session. Thanks to the participants also. Thank you, Mr. Raj Chopra. Pratap Sahu, thank you very much, Mr. Gulati sir and Mr. Dubey sir, for nice, excellent, informative content in light of present scenario facing the public sector entities. Thank you very much. C.S. Tiwari, thanks Shri Gulati ji for conducting such webinar to know about old banking to new global banking to youngsters, and very nice answers given by Shri Dubey sir. Dubey ji, thanks to him and regards. Thank you very much, Tiwari ji.
Thank you, Tiwari ji.
Surendra Park Kalra, thanks very much Shri Rajiv Dubey ji and Shri Tilak Gulati ji for enriching our knowledge. Hope to hear more such knowledgeable topics from you, sir. Thank you, Mr. Kalra.
Thank you.
Yeah. Vijay Agarwal, he is from Tinsukia. Yeah. Whether number of banks will lead to monopoly in times to come. Number two, whether number of branches will reduce after merger, sir.
Not necessary. If the branches are nearby, it may happen. Otherwise, no, it will not happen. Oh, more branches will open. Now, why are you worried? All banks are opening branches still. Even with the digital banking, physical branches will never go. They will remain. Don't be afraid, yaar. Purani baatein chodo, darne ki.
Now, his first question, whether number of banks will lead to monopoly in times to come.
No, not the least. Aisa nahi hoga.
Yeah, good. Naresh Gopal Das Watwani, nice words for hard work and luck by Shri Dubey ji with regards. Thank you. Munni Swami Misala, thanks for program both Gulati Saab and Dubey Saab. As regards the HR problems in Canara Bank is due to both our rivals since beginning. I joined Syndicate Bank in 78 and left in 85. Yeah.
I told you, Gulati ji, main issue in integration and amalgamation is HR.
Yeah, yeah, yeah.
Equitable, just one thing top management should spread: love, compassion for everybody, equal, equitable, treatment to one and all. If top management, MD, EDs, GM do, down the line, everybody will do. But if it doesn't come from the top very clearly, maybe the mixed signals this will happen. And unnecessary, such good people of those banks will also suffer.
Yeah. Nagesh Babu, respected Dubey ji, thank you, sir, for your reply and being a retired executive from Canara Bank, ready to serve the bank and bring good culture and cohesive atmosphere in case the bank's management requires. Okay,
No, no,
sure.
they will not need us, sir. They will go to younger people. They
Yeah,
will take
yeah.
somebody from Citibank.
Yeah, State Bank is giving VRS to old people and giving employment to young people nowadays. Yeah. Sarita Kothuria, thanks and regard. Mahek Sharma, sir, do we need to worry about our career and promotion if our bank is privatized?
No, absolutely no. If you are a hard work person, you can jump from this career to other career. You can go ahead in this career. Sky is the limit for young people. Never be afraid of anything. Your job is only to do your duty diligently, sincerely, honestly. Do that.
Yeah, S. Ravindranath, last question, sir. The discussion and presentation was excellent. Why have we wasted time only in thanks? More questions should be asked to get the benefit of two experts. Thank you very much.
I would welcome.
Yeah, we would welcome. Thank you very much. So, friends, we got this opportunity that Professor Rajiv Kishore Dubey, former chairman and managing director, had come here, spared his precious time to have discussion with us. So, sir has deliberated on all these issues in a very exhaustive manner with a clear concept and gave a reply to the controversial topics also in a very candid manner. So, thank you very much, sir, for your nice reply, sir. Sir, sir, here I would like to bring to your knowledge also, sir, that banking quest. One second, sir. We at Banking Quest, it is a totally open and free platform. At Banking Quest has been envisioned by a group of experts and leaders in the field of banking and finance to groom the future leaders, to groom the next generation bankers. And all these facilities are being provided through our exhaustive website, our analytical blogs, our webinars, and articles published in our leading newspapers. Sir, this banking news, sir, for all the benefits of all the participants, we have recorded this session. If any one of you wants the recording of this session, please send me an email at info@bankingquest.com. You can send me a message also on my mobile 98362894445. And my request to all the participants that please get yourself registered on our website www.bankingquest.com. This website has been made exclusively for bankers, and this website contains a lot of material which is very relevant for the bankers for their day-to-day requirements and for their promotional examinations, for completing the JIB, CIB examinations. In this website, we are having a lot of blogs which gives an analytical view on the burning topics, on the current topics. So if you want to discuss, you want to know about the marginal cost of fund-based lending, MCLR, just click over there. You will come to know the reasons for bringing MCLR, its components, and what are the analytical views of us. And in this website, we are having a lot of tutorials. Just click on these tutorials and you will find a lot of tutorials, exhaustive tutorials. If you want to know something about FEMA, just click here and you will come to know about everything about FEMA in a nutshell. So friends, this registration on our website is totally free, no charges at all. We do not charge for registration on our website. We do not charge for attending our webinars. So friends, thank you very much. And once again, Professor Dubey, thank you very much for sparing such a time and giving us your experience, sharing your experiences with us. So thank you very much. Thanks all the participants.
Just 1 minute. Thank you. I must thank you, Shri Gulati ji. It is your initiative. You have done a good job. The whole participant must know the real thank needs to be given to him, because he has originated it. He has been able to convince me to talk to you. Gulati ji, my best wishes to you. Thanks to you. My support to you. I am always there for you as before. Wherever you want, you can share my mobile and mail ID to all the participants. I don't worry about it. You can place it in the website. If somebody has a question which he missed out today, or if they want any clarification, they want any guidance to groom people, I am always available. Thank you. Namaskar.
Thank you all the participants. Thank you, Dubey sir. Thank you very much. So I'm closing this session, friends. Thank you.